I'm meeting today with Trent Erickson, Certified Public Accountant, and we're going to talk about some important things that almost everybody needs to consider in divorce when it comes to tax time. Now, those of you watching this don't know, but it's March 18th, so we've got a little more than a month before everybody's got to file their taxes. But even then, we're going to talk about extensions and a little bit about that too. So tax time's about a month away. What are some of the things that when you see people dealing with a divorce that they leave money on the table with or they make mistakes with? What do you want to start with?
One of the biggest changes that you have when you file as a divorced taxpayer is the filing status. So you've changed from a married filing joint couple, which is typically the most advantageous tax position for you as a couple in paying taxes. You go from that status to the next status, which is usually going to be a head of household if children are involved, or you go to a single taxpayer. The head of household gives in between the married filings jointly tax brackets and the single, so it's kind of a mid-range.
It's worse than married filing jointly, but
Right.
better than married filing single.
Or just single.
I'm sorry, did I say married filing single? That's
Yep.
right. Yeah, then filing single. And what do you have to do to qualify as head of household? Can both parents, let's assume that we have both parents sharing custody as equally as possible. It's impossible to share it perfectly because we have 365 days. But let's say we've got 182 for mom, 182 for dad, and then the next year it's 182 for dad and 183 for mom. How can we still both claim head of household? How does that work?
So a parent, let's say you have two kids, and one year you claim this kid or the next year, or it's the same every year, but as long as there's more than one child involved, both parents could claim, it's possible to claim head of household.
Okay.
The same parents, or both parents can't claim the head of household for the same child.
Okay.
So if there's one child involved, that won't work. If there's more than one,
Can you alternate years?
You can alternate years.
Okay. So and if we have 3 kids, 2 can go to 1 and 1,
Mm-hmm.
okay, all right.
Same idea. The requirement for a head of household is, one, they have to be a qualifying child or a qualifying relative, and there's a lot of restrictions around that I won't go into, but there's also a restriction of they have to live with you more than half of the year, and you have to provide a home for them for more than half of the year, and more than half their support.
Okay. How much money, or do you know what the percentages are when you go from married filing jointly to filing single, and we'll just use that as an example. That can increase your tax bite by quite a bit. I mean, like even 5-10% or more, can it?
Absolutely.
So one thing I want to point out is that even I forget sometimes that when we fill out all the financial documents and figure out how much money there's going to be to go around for mom, for dad, child support, alimony, what have you, we assume we've looked at tax returns for the last 3 years where everybody filed as married jointly. And what we have to figure out is, let's assume in a typical situation where it's a husband paying alimony and child support, suddenly he might have $600, $700, $800 a month less than he used to have simply because of his change in tax status. So you need to keep that in mind. And your lawyer may not know that. I mean, I hate to say, even there have been times when I've done that. So tell your lawyer, hey, look, this is my tax treatment, married filing jointly. This is how many exemptions I will lose as a result of filing single.
Yep.
I will have 6 to 7, and I'm just making those numbers up, but I'll have less money to go around. That needs to factor in, because if it doesn't, you'll just merely assume that you've got that income. Boom, you go to file your taxes the first year you're divorced, and now you're the one that has to make up the difference out of your lifestyle. All right. So that's very important. I'm glad you started with that, because if you hear nothing else, that'll still save you a bit. What else do you want to talk about? What's the next subject that people in a divorce will often encounter?
Yeah, another issue that we find quite a bit is, along those lines, we touched on it barely, was dependency. So who are your dependents and how can you claim them? So the rules are roughly the same for a single parent or if it's a married couple with kids. So who you can claim as dependents are your children. You can also claim relatives. You can also claim people that you support. Now, depending on your relationship with who they are, a child, I have different rules for how I have to provide dependency proof of how they're my dependent. If I pay over half the cost for my senior parents, for example, if I'm taking care of them, I can claim them as dependents as well, but there's different rules involved.
How about stepchildren?
Stepchildren also qualify as similar to regular
Is that kind of the thing, though, where
children.
if biological parent is claiming the child, I can't, or is that different, where it's like They can spend as much as they want on that child, but I can also spend as much as I want. Or is there a problem there too?
So
Can a step parent and a parent claim the same child for taxes?
never.
Okay.
So the IRS will only let one child go to one parent. You can have 2 or 3 under one parent and none under the other one, or you can have 2, split them like you said earlier. You can split them. Now there is a requirement if it's a 50-50 split or some derivation of that equity for the parents. You can decide just verbally or in agreement to say, I'm going to take one this year and you take them next year. You can decide that. If there's a full award given to one parent, the other one has none. If that parent wants to claim them, they can for dependency purposes, but there is a form you have to file as the guardian parent to say, I give this to my
And
ex-spouse.
the other parent has to sign off on that form
Correct.
as well.
So they have to sign it and give it up. Otherwise, you can't take it.
And as a lawyer, I'll tell you that if your spouse won't do that, if your ex-spouse won't sign the form, then you can just take that person to court and compel them to sign the form, or get some changes to your order. One more thing on step parents before we move on. So if I'm a step parent, and I've got a step child living under my roof, and the other parent is a deadbeat, if I claim that child and the other parent doesn't, I can do that, right? A stepchild does count as a dependent that I can claim.
So if we're talking deadbeat in the sense of they're not providing support, or
And they're not
you're paying
claiming them, and they're not claiming the
and
child
they're not
either.
claiming them, then absolutely.
Okay.
And a lot of times I find that people have gone to the route of coordinating with the other spouse of who's going to claim them this year. Does it make more sense for you to claim them, and then we can work out how much difference tax-wise that is after, and we'll just settle off to the side?
Now, we lawyers call that either a tax buyout, when you're saying, look, I'll get a bigger benefit of claiming the children than you will, but you'd still get something. So here's the $300 you would have gotten.
Correct.
So that I can get the $1,000. Now I'm only going to get a $700 net benefit, but it's still worth it to me. We call that either a tax buyout provision in a divorce or tax neutrality. Is that a term you accountants use?
Not as much, but
Okay.
yes, so we hear the terms.
You hear those
we don't
terms?
use them quite as
We call
much.
them either a tax buyout or a tax neutrality provision. Okay. Let's talk about tax problems that may arise in a marriage that come home to roost after divorce. We, as lawyers, get a lot of people that come and say, we had money troubles and we got tax troubles. I'm an injured spouse. And they almost think like by simply invoking those magic words, they don't have to have any tax liability. How does injured spouse work?
So the injured spouse is there, and it's available for people that can qualify for that. Now, sometimes it's hard to prove what injured spouse really is. You have to have been in a situation where, and prove it, and it's a lot of times it's hard to do, that you didn't have any knowledge of that your spouse was deceiving you and defrauding the IRS. That can happen a lot where you have a business involved. So if one spouse runs a business, mm-hmm. and they're running the business and they're running some shady things or some unfortunate things for the business, the spouse has no clue of what's going on. That's probably the best case scenario because it's really easy to get that through a business.
And easy to believe.
Yeah,
because it's like, you don't know anything about this business. You didn't start the business. You didn't run the business. You didn't answer the phones.
Correct.
You were at home while your spouse went to work. And so if you're one of those, I see people who's like, it turns out that we cheated on our income taxes 2 or 3 years in a row. And that's my signature, but I didn't know. And it's like, you're going to have quite an uphill battle proving that to the IRS.
It is. When you're talking about, every time I sign a return with somebody, I review the return with them and I make sure they understand I'm the preparer of the return, but you are the owner of the return. And when the IRS comes back to people, they don't come to me. They come to the taxpayer because they're the ones that own that return, and regardless of who they employ to help them prepare it, really the buck stops with them. So It's really important that everyone realize when you sign that return, ask questions if you don't understand, because it is your return.
And by the way, this would be a good point. This wasn't something I planned to ask, but are there any stats that tax preparers and accountants keep as to how much savings there is between people who try to do their taxes themselves and people who hire a tax professional?
That's a good question. So the answer is probably yes. I don't have any.
Yeah.
But it depends on who you ask.
From my personal experience, I can say I tried doing my own business taxes, and I either always failed to pay enough, or one year I paid to the penny. I was so proud of myself. I thought I'd finally gotten it. I double paid to the penny. So that's when I said, forget it. I never do anything with my taxes other than keep the records and hand it to my accountant.
Yeah.
So,
One example
it's worth every cent.
Yeah, it is. Obviously, I'm going to say it's worth it because that's what I do for a living. But at the same time, let me give you a quick example. I had a guy come to me last year who had to refile an amended return. He had me come and help him, and he said, "Here's the extra form that I left out last year. I got it late. Dividend form came late. It's probably happened to many of you before. I got it after I filed my taxes. Can you please help me?" Of course I can. So I went and started refiling the return. But as I went through that, I noticed that he had done his return by himself that year, and he did it by hand. Whenever I see a hand-done return, I automatically go back and redo the entire return myself because almost without fail, there's going to be a mistake somewhere along the lines. For him, it was a benefit to him at the end of the day because I saved him about an extra $1,500 from him just having miscalculated his tax and he overpaid on accident. So that happens a lot.
Okay, so you saved him or got him an extra $1,500, and what did he pay you?
I think he paid me $150, something like that.
So you can see that, and just the peace of mind alone, even if all you do is break even financially, it's nice to know that somebody who knows what he or she is doing prepared your taxes. All right, let's talk a little bit about some of the financial settlements that go on in a divorce and the tax treatment of that. So for those of you that are watching this for the first time, contemplating divorce or realizing that you made a lot of mistakes in your divorce and you're trying to clean up the financial mess, you've got retirement and pension and other kinds of benefits that were accrued during the marriage that are typically divided, at least presumptively, 50-50. So if you're a wife whose husband has been working for 20 years and has a pension that he's earned, you get half of that. You'll almost always get half. And if you both have pensions and one is substantially larger than the other, we'll still divide each 50-50 so that there is a half division between the both. We can offset one against the other.
Right.
Tell us a little bit about qualified domestic relations orders and tax treatment in general, and what you can do to avoid the penalties, what you can do if you need cash out now, what you will have to pay, but how you can minimize.
Okay. So when that money goes into a qualified plan, for example, a 401k, like you mentioned, a pension plan, that's all money that still has not been taxed. So when that money at the end of the day comes out of the plan, the IRS wants to get paid their tax on that money.
So is dividing it between the two spouses in a divorce, is that money coming out to the person who's awarded his or her half?
So it depends on how it comes out.
Okay.
If it comes out and you say, "Hey husband, we're going to settle this, we have nothing in place to have a judge actually request that you distribute that money to me," you can have him pull that out of a pension. The problem is, without a qualified domestic relations order, it's taxable income. What that does is the judge says, "Hey, I'm ordering you to pay this money out, not to make it taxable income, but just to transfer it to the spouse." When you have that,
to fulfill that spouse's marital interest that he or she
Correct.
already had. It's not a transaction. It's not a taxable event.
Correct.
And
So-
that's to let the IRS know nobody's playing any kind of games.
That's right. So when it gets out, basically what you're doing is taking it from spouse one and they're rolling it over to a spouse two account. Same tax treatment, which means zero. It's not a taxable event, but you get the same taxable basis in the asset if there is any, or if it's just a 401k, you get the money and it continues to build now in your name rather than in the spouse's.
But I'm in a situation where I want to make use of that money now. I don't want to roll it over as much. Well, actually, I'd love to, but I'm going to use that to put a down payment on the house because now one of us we had two people living under the same roof. Now one of us has to go get a new house, and I'd like to buy a house. And that chunk of the 401k I'm getting from my spouse will help. Can I have a quadro that says, "Give me the money," and I don't pay taxes on it?
You can have a quadro that says "Give me the money," but
Okay.
the IRS will definitely
I will get
charge
taxed on that.
So anytime you pull money out of one of those accounts and keep it as money that I'm going to start using, it's taxable income to the taxpayer. Now there are provisions that allow you to. There's another issue with that. So you get taxable income. You potentially, depending on how old you are, might have the early withdrawal penalty, which is 10%. Now there are ways to get around that for different reasons. I won't go into all those, but there are exceptions to that rule. Please consult with a tax advisor when you get to that point.
And some of them are divorce related. The idea
Some of them
being
are divorce related.
You're taking the money out early, but if it's incidental to a divorce, sometimes you can either reduce or eliminate certain penalties.
Correct.
So keep that in mind too. Okay? These are all things that a lot of attorneys don't know. That's why I brought Trent here. I know about it from talking to guys like Trent, but I'm not an accountant. But I'm glad that I talked to them, and I'm glad that you know that there are resources out there that are familiar with this. You guys have publications on that, workbooks, continuing education courses. You're kept up to date on all these things and know what can be done. And you can even get creative perfectly within the law, that is ways to save people. Maybe it takes some advanced planning, or you do things over several years. There's a lot of things you can do. So
Correct.
Before we forget, make sure that you talk to an accountant as part of your divorce. And you're not, no, I'm not doing this so that I can employ accountants. I'm doing it so I can save you some money. I'm not an accountant. There may be a divorce lawyer who's an accountant as well, but I'm not him. Make sure you use a tax professional. And you can go to H&R Block, and some of those people are really smart. But a certified public accountant is the gold standard. All right. Should we talk about anything else before I move on to questions about alimony? Is there anything you wanted to cover before we move on to alimony?
One thing that came to mind when we were going back on dependency and how you file with your filing status, depending on how you file, it will affect more than just the tax bracket that you're in. What I mean by that is there are certain credits you can claim as a married filing joint couple that you can't claim as a single person, that you can't claim as a married filing separate filer. So there are some reasons. One big one would be the earned income credit. Let's say you're still married legally, but you haven't finalized it, and you're separated, you haven't finalized the divorce, you still end up filing as a married couple, but you don't want to file jointly, and you say you file married filing separate.
Okay.
Married filing separate is the very worst tax position to put yourself in.
Okay.
It's the worst tax bracket, it's worse than single, and you lose a lot of ability to take deductions and credits. For example, a big one would be the earned income credit, the child tax credit. A lot of your deductions for interest on your home, things like that, can get phased out very quickly in that filing status. So
Okay.
one item that you want to keep in mind, if you're in that bracket or in that situation, please consult with a tax advisor before you just decide that's the way I'm going to go. It's absolutely, almost 100% of the time, the worst way to go.
Okay, so I was going to ask this question, but I was going to say, can you think of a situation where married filing separately works? And I guess you can always think of the exception that proves the rule, but we'll move on and just leave that to you asking that question if you find yourself in that circumstance. Okay, now let's get some basics about taxation or tax treatment of alimony. Who pays taxes on the alimony that is paid? Is it the person who earns it and pays it to the ex, or is it the person who receives it?
So alimony is a payment to the spouse for an equitable
For support.
For what they're doing.
Ongoing support.
So the way that works is if I'm paying an alimony to my spouse, what I do is I say I have $50,000 of income and I'm going to pay her $10,000 of that. Well, that's something that the tax code has provided for me to say I'm going to reduce my taxable income of $50,000 by the $10,000 because I'm not really receiving that money.
Yeah.
So that's going to her now, and it's being reassigned to my spouse. On the tax form, you actually report a social security number and their name and how much you're paying, and the IRS obviously looks on the other side to see that same amount of income come in alimony income.
So folks, if you have to pay alimony, I'm sorry to hear that, but at least you don't have to pay taxes on the alimony that you pay. That gets
Correct.
taxed to the receiving spouse, or ex-spouse in this case. Well then, how about child support? Do the children pay taxes on the child support they receive?
That's a great question. That's the exact opposite of alimony. Child support is completely not tax deductible for the payor of the money. The recipients obviously pay no tax in that case, so in respect to child support, there's no tax relief for paying any child support.
So if we're talking about the proverbial $50,000 parent, $10,000 of which every year gets paid out to in alimony. Now I'm down to $40,000. But then on top of that, I've been paying $800 a month in child support. I still have to pay taxes on that. That's
Correct.
still part of my income. So you only get one tax benefit. That's from alimony, but not from child support. So the person receiving child support does not pay taxes on that.
Correct.
It's the payor.
It's the
All right,
payor.
so keep that in mind. Just again, when you're doing your planning to try to figure out how much money there is to go around to your ex for alimony, if that's an issue, and to your children, and to your lifestyle and bills and debts and all that, keep those things in mind. There's a tax benefit to in the form of not having to pay taxes on alimony. You do not get any such benefit on the child support you pay. Some people try to game that system sometimes, don't they?
They do.
They make it so that there's tons of child support paid to the ex-wife, for example, so that she won't have to pay taxes on it. Is that legal?
It can be, the IRS is always up for review for anything. So they will review anything that looks suspicious. And if they go back and find that there's an equitable adjustment that needs to be made because you've over-allocated one way or the other, they will definitely review that. It's not as common as you would, as could happen, but
Okay.
it is something that they could definitely review at any time.
All right. In fact, I'll tell you this just so that if you happen to meet with me or meet with another attorney, make sure you also ask about the child contingency rule, about adjusting alimony and how that can be looked upon with suspicion if alimony reduces at the same time a minor child reaches the age of emancipation or adulthood. Okay? We don't have time to cover that today. Maybe we can cover it at a different time. But there are many other tax things that are issues that you could cover with people and either tell them, no, you can't do this, or all you have to do is structure it this way and it passes legal muster.
Correct.
All right. With that then, I think, is there anything else that you wanted to talk about? Oh, I know, I had one with alimony. So if you're going through a divorce and you've spent any amount of money, how much of your legal expenses, if any, can be written off? Because I know that sometimes certain business expenses that are legally related are write-offs for business purposes. Can I write off any of my attorney's fees paid in the course of my divorce?
That's a good question. So yeah, the answer is yes, you can. The only piece of your divorce legal fees that are allowed to be deducted on your personal return are those related to the collection of alimony. And what that means is if you have to employ an attorney to go after somebody to collect that alimony for you as the spouse, you can deduct those. And I'll caution you to make sure that your attorney very clearly identifies that these are for alimony collection efforts. Otherwise, you might have a hard time writing those off with the IRS should you get audited. But as long as it's related to that process, you can deduct that money so basically what you're doing is offsetting the income that you're receiving with that. So you get a reduced income by that.
I've never had a client ask me to do that either. And so it's something that I probably ought to volunteer to a client, is to say, you know what, we did fight for alimony. And of the work I did, this is about the amount of service or the amount of hours, depending upon how you're billed, that I can allocate to collecting alimony, and that can give you another tax break.
One other thing that you might be able to write off to qualify my previous statement was if you have any expenses for legal costs that are related to tax advice, you are able to write those off as well. Now, let's say if you go to Eric and you try to convince him to give you tax advice.
And I give you all of my tax advice in 3 minutes or less.
You can deduct any costs related to tax advice related to a divorce as well.
All right. Well, for those people that may want to give you a call, would you just give them again your name and contact information?
You bet. So Trent Erickson, phone number is 801-706-4234, and a quick email address is EFS, as in Erickson Financial Services, tax, so EFStax@gmail.com.
Thank you so much.
Thanks, Eric.